Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for January 23rd, going into the 26th. Everybody had a good week trading this week. A lot of big movements here in the natural gas. Okay, we have been bullish since the break above 281.10. We've seen $2.83.9 to the upside. A lot of other bullish calls in here. We had gotten bearish briefly overnight when we failed back down through this formation and then returned bullish on the break back above it right in here. Talked about that right here. The trade above 493.20 projected this upward 330 ticks minimum, $1.93 plus maximum. We obtained 718 ticks of that before failing back below. But the decent trade back above this morning warns of decent strength again. So I said to buy against or approaching a decent stop below 492.60. I believe the stop was 135 ticks this morning. So we're still bullish, looking for this to head higher. I'd stayed in the Feb here because really we had much greater volatility versus the volumes here were pretty much similar in the Feb and the March through yesterday. Some of it was shifting, but now the March is much more than Feb. Feb's really dropped off, so I am going to switch to the March. Now the March also is broken above us. We've been bullish from below. Obviously, the March has had a bullish formation in here, bullish formation in here. So similar projections to the upside or bullishness. But now we've broken above this line right here, and that comes in at 348. The 348.10 through Monday. It's basically a flat line right in there. We came just within a few ticks of stopping it out below, but have not stopped out below it. But that warrants a much higher trade. The only caveat to that might be that we could be in the last stretch of this move up on a lower time frame. Got to be aware of exhaustion right here, 379.40 to 384.30, and then another possible exhaustion at 389.90 to 395.80. However, there's another formation that comes in right here at 393 or 394 basically, and moves up very slightly up to 394.60 by the end of Monday. If we take that out decently on the upside, then that's going to warrant of continued strength and likely run up to this formation up in here around the 428 area, which is going to be another bullish formation. Bear with me just a second. Decent penetration in there, and the March is going to be 76 ticks until Monday's open. Thereafter, it'll be 68 ticks. If you're still trading to February, a decent penetration is going to be 179 ticks through Monday's open, and then it will be 160 ticks. I maintain gap lower on Monday. We'll leave a minor bearish reversal above. I would also warn in March if we break above 370.20 to 370.120. What did I say? I'm sorry. 370.20 to 371.20 and back below, that would warrant a pressure as well. Okay, moving on to the crude oil. Crude oil will have to maintain gap higher, leaving a minor bullish reversal below on the day. It turned bullish this morning. We held exhaustion below with the 54.89 low, rallied $7.47. A couple of other bullish calls in here. Those are all off hold now. Said the trade back above 60.01 now warrants a decent strength. We've seen a run up to 61.25. I also said that decent trade above 60.31 will warrant a decent strength. And like I said, we've seen that strength up to 61.25 so far. Expecting to see more than that, at least $1.50 to the upside. Possibly $2.50. If we fail back down below that formation decently, that's going to warrant decent pressure. That's going to come in at 60.20 minus 1.2 per hour starting at 6 o'clock p.m. Eastern Standard Time. Decent penetration in there is going to be 38 ticks through Monday. Through Monday's open. Thereafter, it'll be 34 ticks. Maintain gap lower on Monday would leave a minor bearish reversal above. I would also just caution that at the same time, we may be in the last stretch of this move up from the lows. Possible exhaustion to be aware of right here at 63.08 to 63.19. And then multiple time frame exhaustion up here at 64.09 to 64.47. Okay, and in the RBOB, we negated a minor bearish reversal above yesterday, left a minor bullish reversal below today. Bear with me a second. Just calculating something real quick. Decent trade below this formation right here will warrant a decent pressure. That's going to come in at 184.54. Plus 4.5 per hour starting at 6 o'clock p.m. Eastern Standard Time. I would also be cautious of possible exhaustion above here at 189.45 to 189.83 and 191.43 to 192.36. Maintain gap lower. Tomorrow, we'll leave, Monday, we'll leave a minor bearish reversal above. Okay, heating oil. I'd say Monday has a good likelihood of seeing range expansion. We held exhaustion with the 204.69 low. We've rallied 39.68 cents. A lot of other bullish calls in here. And then in the March also, that was carried over from the Feb. In the March, Friday, we left a minor, not today, but the past Friday, we left a minor bullish reversal below. I rallied 13.68 cents from the 223.10 open. Decent trade below this formation right here will warn of decent pressure. This is going to come in at 231.43. Plus 9 per hour starting at 6 o'clock p.m. Eastern Standard Time. That'll project this downward at least 4 cents. Maximum of maybe 8 cents. If we break below there decently, back down through it decently, look for decent short. If we break below there decently, back up through it decently, look for decent short cover to come in. I would also caution that we may be in the last stretch of this move up. Possible exhaustion right here at 239.06 to 240.65. Okay, the Brentwood left a minor bullish reversal below on the day. We also broke back above this formation up in here, which is bullish. Trade above 59.69 has brought in $7.13 of strength before rolling over. Number of other bullish calls in here. Then I said to get long on a decent penetration above 65.52, which we settled above right here. So that warrants a decent strength again. Again, I'd be aware we may be in the last stretch of this move up with possible exhaustion right here at 67.78 to 68.38. Decent trade below this formation down below, which is going to come in at 63.93 plus 0.5 of a tick per hour starting at 6 o'clock p.m. Sunday. That'll warrant a decent pressure for at least $2. In the gas oil, maintain gap higher on Monday. We'll leave a minor bullish reversal below. We did leave a minor bearish reversal above. That has not really been negated yet. Decent trade below this formation right here, which is going to come in at 668.54 plus 23 per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent pressure. And just as a reminder, we held exhaustion with a 596.25 low. We rallied 93.5 to the upside and a lot of other bullish calls in here. I'd also be aware if we rally, there's a possible exhaustion above here at 695.12 to 698.12. And then a higher one up above at 703.93 to 711.25. And the cadence going into Monday is the RBOB is the weakest of the three, the heating oil in the middle, and the crude the strongest of the three relative to one another. I would also caution if either if either of the RBOB crack or the heat crack gap lower Monday, leave that gap in place. Those will leave minor bearish reversals above. And likewise, if the RBOB to heat spread leaves a maintained gap higher on Monday, that'll leave a minor bullish reversal below. So I'd definitely be paying attention to these. Okay, I hope you have an awesome weekend, and I'll see you on Monday's podcast.